Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be looking at the bearish measured move, and this is a continuation signal as well as a reversal signal. Typically, you're going to see the reversal phase in the first leg down. You're going to have a consolidation period, and then a continuation of the previous trend down. This is the same thing as your bullish measured move. It's just flipped upside down, so it's a bearish measured move, and it would be bearish because it has a negative slope. Basically what you have is the first downtrend, or the first leg of the move. You won't know you're in a bearish measured move until you actually get the breakout at this point. We'll walk you through that. Your first leg to the downside typically has good volume behind it. The consolidation period on this particular chart trended counter trend, like it was trying to reverse back to the upside here. This doesn't have to actually form in this particular fashion. It could be many different formations. It could be more flat like this, horizontal, and it could be a coil or a symmetrical triangle kind of thing. Many different methods that it could form on the sideways movement. Let me clean that up. Okay, during the consolidation phase, after you've had the first down leg on strong volume, the consolidation phase typically has a very weak volume. Volume will dry up. That's normal until you start to have the breakout. You should see an increase on volume as he starts to sell off on the second leg. It's not as important on the second leg as it is the first. The first knocks everybody's socks off. This one counter trend moves up. When the second one happens, people just kind of throw in the towel and let it happen. The secondary leg, or the second part of the, or say third part, but the second leg is typically as long as the first one. You can measure that by points or percentage. Some guys will analyze it and say if it started at 21, fell down to 14, they'll take the distance there and then measure that out from here on down to the bottom and get their math that way. Others will do it from percentage. It doesn't really matter which way you're more comfortable with. Just expect the third part of the measured move, the second down leg, to be equal to the first. These particular patterns typically form over a period of several months. One of the easiest ways to trade them is to track them with your trend lines. Your trend lines are going to be drawn. Let me clean that up a bit. You're going to need at least 2 points to draw a trend line on, of course. You're basically finding yourself a couple of high points that are bouncing off of a resistance line. That's something you can use to, if you get a bounce, let's say you were to do this number, they're not always going to be the same, but let's just say that one had done this number. You could start using those bounces to short. You want to be shorting and not going long because you are in a downtrend. You know, at the low point here, getting lower. Okay, you no longer want to trade that from the long side, but you could use it from a short side within that particular price channel. Another way would be watch the counter trend. When the counter trend move starts to retrace some of the previous down leg, watch for the breakout where price falls below this line and closes below the line like it did right there. When that happens, you've got another opportunity to go short. Sometimes you'll get a kick back up and test that previous support, see if it's acting as resistance. That could be another opportunity to go short, and then you just return to the previous strategy of finding opportunities where you bumps up against a resistance line, and you can short there and cover there, short there, cover there, so forth and so on. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.